Hello everyone, and welcome back to today's market update. Let's dive straight into the numbers from last Friday, July 3rd, as U.S. markets were closed yesterday for the Independence Day holiday. Starting with the key indices. The Nasdaq closed at 25,832, down about 1.1% for the week. The S&P 500 finished at 7,483, essentially flat. The Dow Jones edged up to 52,900. The VIX, which measures market fear, came in at 15.81, a relatively low level indicating that panic is not running high. The 10-year Treasury yield was 4.48%, a slight uptick over the week. The dollar index held steady around 100.86, trading in a narrow range. The yuan was stable at 6.78 against the dollar. Bitcoin showed strength, closing at 63,184, up 5.33% for the week. Crude oil, WTI specifically, was at 68.78, up 1.55% for the week. Spot gold finished at 4,187, up 1.15% for the week. Now, let's talk about the big picture. Last Friday's market was a textbook case of structural divergence and capital rotation. This was not a single-direction move. Money flowed out of the previously high-flying tech growth stocks and into digital assets and some defensive sectors. The rotation was clear. Tesla dropped 7%, dragging down the Nasdaq, while Bitcoin-linked stocks like MSTR and IBIT surged. MSTR gained 7%, and IBIT was up 2.6%. Tesla's sharp decline was mainly due to delivery numbers falling short of expectations. The overall risk-on sentiment hasn't faded, but sector rotation is accelerating. Looking at global markets, Chinese A-shares bucked the trend on Friday, closing higher. The Shanghai Composite added 0.37%, and the CSI 300 gained 0.62%. Foreign capital made a modest return, and tech and consumer stocks rebounded. European markets rose for the fourth consecutive week, hitting new all-time highs. In the U.S., because of the early close for the holiday, we saw an extreme split between tech stocks selling off and Bitcoin-related stocks rallying. The turning point came when Tesla plunged and MSTR immediately reversed higher, signaling capital shifting from traditional tech to decentralized assets. Let's look at the key linkage indicators. The dollar index was flat, the yuan was stable, so there was no directional signal from the currency side. A-shares and U.S. stocks showed a short-term divergence, with A-shares rising against the trend. Northbound capital inflows were about 5 billion yuan, suggesting foreign investors are not being disrupted by U.S. stock volatility. The 10-year Treasury yield edged up, not falling sharply despite tech weakness. This tells us the market is not in deep risk-off mode but is undergoing structural adjustment. The three indicators are not resonating strongly, showing local divergence. For Asian markets on Monday, A-shares may continue their independent run, but we should watch for any downside follow-through in U.S. futures. On the capital flow front, the strongest sector is digital assets. Bitcoin, MSTR, and IBIT all significantly outperformed. The driving forces are continuous net inflows into ETFs, short squeezes, and rate cut expectations. Another relatively strong area is defense unmanned systems, but the sector effect is weak. The weakest sector is tech growth stocks. QQQ, Tesla, and Nvidia all underperformed. The main reasons are profit-taking after a strong run and Tesla's disappointing delivery numbers. For Monday's Asian session, we expect the Shanghai Composite to trade with a slight upward bias, with about a 60% probability. The key drivers are weekend policy expectations and the lack of U.S. market direction. For Bitcoin, we see high-level consolidation or a push toward 63,500 to 64,000. The 10-year yield may inch up to 4.50 to 4.52%. Nasdaq futures may open slightly lower, down 0.2 to 0.5%. Gold may trade firm, targeting 4,200 to 4,220. Let me give you a clear directional conclusion. The market is in a structural rotation phase. Digital assets and defensive sectors are relatively favored, while tech growth stocks face short-term pressure. Our strategy is to stay mostly on the sidelines, structurally long on digital assets and defensive names, and reduce exposure to high-volatility tech stocks. If A shares break above 4,050 with volume on Monday and northbound inflows continue, consider adding to core A share holdings. However, if U.S. futures open down more than 1% or the VIX breaks above 16.5, switch to a hedging mode. Key invalidation signals are Bitcoin breaking below 61,500 or gold falling below 4,120. Thank you for watching, and we'll see you next time.